Good morning. You're watching Business World Live. I'm Jess De Los Santos. It's the start of a new trading day, but first, let's go straight to our top story. Foreign direct investments jumped by 20% year on year in August, even as investors generally remain cautious. Net inflows of FDI rose to $812 million in August. That's from just about $677 million in the same month in 2020. But month on month, August inflows dropped by 35% from July figures. Placements in August mainly came from Japan, the Netherlands, and the United States. A bulk of these were invested into manufacturing, information and communication, and real estate industries. But while overall FDIs rose in August, cautious sentiment seems to remain among foreign investors. That's what investments in equity and investment fund shares dropping by close to 19%, while reinvestment of earnings fell by nearly 25% in August. All right, on the back of that annual growth in FDI for the month of August, despite inflows coming in slower than July figures, it's here. The PSEI is still continuing its decline from yesterday. The main index so far today is down by 0.2% to 7,361. Recall, of course, that yesterday you have the index snapping its 6 day rally with a 0.9% drop, which brought shares back to the 7,300 level. And it seems as though the shares are taking cues from the Wall Street. That's after the US saw inflation spike to its highest in 3 decades at 6.2%. And with analysts predicting that the worst is yet to come here, pressuring arguments that price pressures are temporary. Let's check in on our leaders and laggards for today here. You'd see, and of course, decliners yesterday beat advancers, but today it seems as though things are spread out evenly here, with a number of stocks here ending the at least starting the day in a positive territory. Here you have Alliance Global, the day's best performer so far, up by 1 and 8 tenths of a percent. San Miguel also increasing here by 1 and 4 tenths of a percent. Now, also, what's interesting here, you have Pure Gold in the positive territory, up 0.9 tenths of a percent. That's after it reported that 9 month net income was up by 13% to 5.73 billion pesos. Also, you have here, at least on the flip side here, Security Bank being the day's worst performer, down 1 and 6 tenths of a percent. Let's see how things are going to fare for the rest of the blue chips as the trading day goes on. But we have to check on Ayala this time around. You see, its foreign unit, AYC Finance, has sold $100 million worth of 10-year social bond to International Finance Corporation. This is the maiden issuance of such bond for healthcare spending here in the Philippines. We have CEO Fernandez Zobel de Ayala saying that this should support their strategic priority to scale up AC Health as a new growth platform. Transaction is expected to be settled by January 2022. You can see here, though, Ayala Corporation starting the day on on the downside here, down close to 0.5% to 880 apiece. And lastly, let's check in on Metro Pacific, which ended flat on Tuesday, despite core net income for the third quarter rising by 44% to 3.5 billion pesos. As you can see, Metro Pacific now up by a quarter of a percent. Well, now in at least flat here at 4 pesos and 2 centavos apiece. Now, still on Metro Pacific, the infrastructure conglomerate is considering taking two of its most profitable units public. Mobile journalist Pamela Vasquez gives us the rest of the story.
Metro Pacific Investments is considering an IPO for two of its subsidiaries, tollways and hospitals. Tollways President Rodrigo Franco says many firms have approached them about becoming a strategic partner before they go public. But they want to wait until the Cebu-Cordova Expressway and the Cala-X become profitable first.
We think cannot be earlier than second quarter of next year, baka the year after pa. I mean, our Cebu project will be completed only in March. We need to see some earnings on that. We have Calax also due for completion next year. No? So we'll wait for that para mag-improve yung outlook of the company so that we don't get undervalued by the market.
Franco also said they'll have to charge slightly higher toll rates for the Cebu-Cordova Link Expressway, which will open by March 2022.
89 pesos for class 1. Originally, the rate approved was 85. Now it's 89 because of the slightly longer scope of the project.
Metro Pacific is also once again entertaining an IPO for its hospital business, potentially by 2023. It first tried to go public in 2019, but scrapped the idea after it got private investment from KKR Capital. MPIC Chair Manny Pangilinan says the hospital division is now actually more profitable than the tollways and water businesses.
There's a possibility of that happening in 2023. Maganda naman yung recovery ng hospital this year, no? Effectively, after Meralco, in revenue terms, the hospitals are now ahead of tollways and even Maynila because the revenues this year will be totaling around more than 30 billion.
But hospital COO Dr. Jeffrey Staples says they're anticipating another COVID-19 surge after the end-of-year holidays.
I would say there is light at the end of the tunnel. We anticipate that with the holidays coming up and the election season coming up, with a lot of mass gatherings and people kind of relaxing their social distancing discipline, we may see another surge or two in cases before we can actually say that the virus is behind us.
Metro Pacific reported that its 9-month income jumped 23% on year to 9.5 billion pesos. Meralco contributed the lion's share of the profits. Mobile journalist Pamela Vasquez, We Are One News.
Here are other headlines we're keeping our eyes on. The Philippines is the fastest growing internet economy in Southeast Asia. That's fueled by e-commerce and food delivery services. That's according to a recent report by Google, Temasek, and Bain & Company. The Economy Southeast Asia report found that the country's overall internet economy in terms of gross merchandise value or GMV will likely reach $40 billion by 2025. The Philippines' GMV is estimated to increase to 93% to $17 billion from a year ago due to government initiatives and mass digital adoption. Despite the rapid growth, the report said that the Philippines also has the lowest digital consumer penetration in the region, with only internet users consuming online services. Now, business associations are calling for a continued Senate probe into the sales of stakes in the Malampaya operators, citing national security threats. Business groups said the government failed to oversee the transaction and intervene, either by blocking the deals or denying operating licenses to buyers, whose qualifications are in question. Additionally, they raised energy security concerns, saying the existing wells are expected to be depleted by 2025. So they say any delays in the review of the Shell and Udena deal may constitute a breach of the government's fiduciary duty to provide energy security. Factory output in the country still showing no signs of slowing down as it rose for a sixth straight month in September. This comes at a time when the economy is slowly being reopened and with the electronics industry forming part of that growth in manufacturing. Let's find out how things are looking up for the sector with the president of the Semiconductor and Electronics Industries in the Philippines, or SEIPI, Dan Lachica. Good morning, Sir Dan.
Good morning, Jess, and good morning to our viewers.
All right, thank you for joining us, sir. Well, growth in the factory output, is this a case of low base from 2020 magnifying whatever level of growth we're having? Or is it really just factory activity really showing growth? And are we expecting things to normalize soon amid further reopening?
Well, it's actually both. As you know, the base numbers for last year in the throes of the pandemic were lower. But this year, the economy is recovering. Global economy, I'm referring to the global economy. The Purchasing Managers Index is at about 54%, which is the highest ever that we've seen. And here in the domestic front, the electronics industry is also recovering rather strongly. We had a 17% growth compared to last year's numbers. We're at $34.1 billion as of September. And if we continue on that path through the end of the year, we're probably going to hit $45 billion, which is even higher than the pre-pandemic numbers of 43.3 billion. So there are signs, strong signs of recovery.
Okay, so it seems as though you are going to hit even exceed pre-pandemic levels here. So safe to say that you are more or less likely to hit growth target for the year.
Yes, that's correct. We actually projected 7%, and we will probably exceed that. But we just have to formalize it. You know, when the board meets this next week, actually. So we're going to be able to confirm those final projections for the year.
Okay, of course, part of that strong performance for the sector is, of course, the export of electronics products that saw, at least for the month of September, a surge of 5.4%. What drove that?
Well, actually, it's ironic, but you might say that the pandemic drove that growth in the sense that a lot of offices are working from home. So devices like telecommunication products, uh, servers, consumer products for gadgets, as well as the need for medical electronics. So those four sectors, of course, including semiconductor components, are driving that growth. In fact, it probably could have been higher. The numbers could probably have been higher if not for the global shortage of semiconductor wafers, which was caused by the pandemic last year.
Given that as well, I mean, good thing that you pointed that. We're seeing a rebound here in global demand for electronic products. How are we responding to that demand, given all these bottlenecks? Are we addressing those as well?
Yes, we are as best as we can, but the root cause really is on the semiconductor equipment manufacturing. What happened last year was that the semiconductor equipment manufacturers kind of throttled down and reduced their capacity for obvious reasons, the pandemic, but they didn't really anticipate the quick turnaround, in fact, meteoric turnaround with the demand, because essentially the global demand is there. It was just kind of stymied for a few months, but then with the resurgence, it was kind of like a backlog had to be addressed also. So from 3 to 6 months of equipment lead time, it's now ballooned to 1 to 2 years, and it's still constipated. The demand isn't going down, as you know, because everything we use in our lives has some electronic components. So it's actually a supply chain issue. As soon as the manufacturers of semiconductor wafer equipment recover, then we will see um, more stable, adequate supply of wafers, which from the Philippine perspective, we have semiconductor test and assembly operations here, which produce the chips, which will eventually be used by the electronics manufacturing services to produce devices, sub-assemblies and sub-assemblies that we will use in the areas that I mentioned: telecommunications, medical electronics, storage, computer, and devices.
Now, are we expecting these bottlenecks to ease up in the coming months, especially with our economy slowly reopening, and not just here, even overseas?
Well, unfortunately, the way the semiconductor wafer supply chain goes, the equipment, as complicated and as expensive they are in terms of capital investment, it's going to take more than months to recover. So I would say that there's going to be a slow recovery, but hopefully we'll see more wafer production capacity increase worldwide. And so we're going to be recovering because the demand, like I said, is there, but it's going to be a slow process. Hopefully from 2 years, we'll see a reduction to 1.5, 1 year lead times, and so on.
hmm Now, of course, on a general, at least on a national perspective, here again, NCR at least is now at alert level 2. Several other areas have been easing as well. What are your thoughts on the possibility of Metro Manila at least relaxing further to alert level 1?
Well, on one hand, it's good for business, opening the restaurants, opening the malls, even the theaters and spas and all that, right? But we just need to be very, very careful in terms of observing and the discipline to for the minimum observing and using the minimum health standards. Because as soon as we lower our guards, ignore the minimum health standards, we're going to see a resurgence of infections, which we hope not to see. Unfortunately, as I see, video coverages of people in the Dolomite Beach or Divisoria, it seems that not everyone is paying strict attention to the minimum health standards. So, and then we hear yesterday that there might be the possibility of a new variant. I hope not. But the important thing really is we need to balance the economy with the threat of infection. So we just have to make sure that we're following the minimum health standards.
Okay, now speaking of these following health protocols and what other measures of vaccination included, you have, of course, been an ardent supporter of vaccination here, but there are now talks of a possibility making it mandatory, especially for employees, those working on site. What are your thoughts on that?
Well, it's well to begin with. We thank the government for just accelerating the delivery of the vaccines. I think we hope that we have more than enough, not just for NCR, so that we will see deliveries of the vaccines in the other regions. And for our industry, I specifically mentioned Region 4A, the Calabarzon area, Region 7 in Cebu, and up north, the Region 7 and Baguio and Tarlac. So the the vaccination level of the factories, the employees in the factories are anywhere from 40 to 70%, and we hope to see that increase. The hesitancy level is very low. It's just an issue of vaccine availability. Now, the question is, to your point, I'm glad that the Department of Labor and our government has reconsidered and is now giving the companies the authority or the right to refuse people who are not vaccinated. Of course, we won't terminate those who have not prior to this ruling, but they may be assigned to jobs or tasks or even shifts that minimize the exposure of non-vaccinated to vaccinated people, and essentially in the spirit of protecting both the vaccinated and the unvaccinated people.
All right, thank you again for your insights and your time this morning, SEIPI President Sir Dan Lachica. Thank you, Sir Dan. Stay safe.
Thank you very much. Take care. Stay safe.
And that's a first look into the business day this Thursday, November 11, 2021. Catch Business World Live for the market close at 3:15 p.m. today. I'm Jess De Los Santos, and we are on News Mask on. Wash hands and stay safe, Philippines.